Welcome to the Comstock channel. I'm Brianne Hendrickson, and today I have Justin with us. Welcome.
Hey, good morning. How are you?
Good. How are you?
I'm doing all right. A little bit of moisture last night up here. Localized rains from a couple tenths up to 3-4 inches in northeast Iowa. Hopefully, some of that water finds the Mississippi River. And I don't think anybody's too upset about the harvest delays with getting the water at this current time.
Yeah, I'm a little jealous. I saw that y'all got some rain, and I mean, it scattered everywhere but where we are. So I'm glad somebody got some rain. As a reminder, we are still accepting your yield numbers, so please keep those coming in. You can send them into report@comstock.com. And let's kind of go ahead and dive right in. Yesterday, I talked about all the reports coming out, and yesterday was kind of a busy one. We had the food price outlook, cold storage, poultry slaughter, and crop progress. Don't forget, we have more reports coming out this week. Wednesday, September 27th, the livestock and meat domestic data, broiler hatchery, peanut stocks and processing, potatoes and turkeys raised come out. Thursday, September 28th, the weekly export sales, fruits and tree nuts outlooks for September 2023. Egg products and hog and pigs come out. Friday, September 29th, grain stocks, small grain summary, agricultural prices, and peanut prices come out. If you would like us to talk about one of these reports, make sure to let us know in the comments, and as always, I will put the link to these reports below.
Looking at the cold storage report out yesterday, the total frozen pork numbers came out. As bearish as this hog market has been, the kill has been relatively steady in that 480,000. Yesterday was off just a touch, but 480,000 approximate head a day. And we follow that up with cold storage numbers that were not all that bearish, in my opinion. We're down to 2,000 levels, running significantly less than last year. And looking forward, we also had those belly numbers out, running right at 2002 levels, slightly above 2020, the COVID year with the disruption in shipping and all that good stuff that I hope we don't have to deal with anymore. But not overly bearish, in my opinion, on the cold storage numbers, which does provide a nice setup going the rest of the week for the hogs and pigs report coming out at the end of the week here. The average trade guess is for about 0.7% lower at 73.6 million head of hogs, and the breeding intentions down about 1.5%. So possibly getting some information that maybe could spark this hog market and provide some relief for those producers.
So were you guys kind of surprised about these numbers, or were you just kind of like, okay, this is okay?
Well, the load counts have been good all year, but we continue to find these hogs to slaughter and depress the cash market. So, it's a positive sign. Exports have been fairly good on the pork side of things, and I know that we've talked about that before, but it just goes to show that we don't have this terrible glut laying around compared to the last 3-4 years. Possibly, maybe we're setting ourselves up for a little bit better days in the future on the hog market. That belly market has seen a nice pop this last couple of days, trading in that $140 range. Normally we don't see the setback that we did in August. So maybe we're getting some support and some solid footing under those numbers. So just popping up this quick daily December hog chart. I know we have quite a few producers out there looking to get some hedges on. This is just a daily December chart. It looks like we're going to run into some pretty decent resistance in that 78 level. I know there's a lot of orders out there, 77 to 79. Hopefully, if you have some pigs to sell, potentially looking at this report coming up this week, it may be a place to get those hedge orders in at if you are looking to get some hogs marketed in the near term.
All right, let's switch over to cattle. How did they do?
Well, obviously, it's been as Eric said the other day, the shining star, but it's to no surprise that we have less cattle on feed every month. Cattle on feed number comes out. We continue to hear about the short runs of cattle. Cold storage, it's not backing up in the coolers, meaning we're we're staying relatively current back to close to 2001 levels. To me, that underpins the market nicely. We have read some things about restaurants maybe not purchasing in advance like they normally would, but at these record high prices, and also with the fear in the economy, I don't necessarily blame them for not putting a big book on. And it seems like consumers are getting adjusted to when they dine out, the price is what it is, and also a changing menu price. A lot of restaurants nowadays that you go to are having notices up due to increased food prices. We're adding or subtracting from our menu prices. So it seems like maybe the demand is there. We'll have to see how that plays out coming into the fourth quarter with these higher energy prices and what effect that has on the total number of demand out there. Yeah, and then just sidestepping into this chart, I put up a weekly chart of the December cattle for producers out there looking at getting hedged. Today we're off to, sharply lower here today on those cattle market. I haven't seen any really good excuse yet come across the wires, but we are at historic highs. We're historically overbought. We've been overbought in the weekly charts forever. This is not new news to anybody, but I just wanted to put a plug out there. Looking at that chart, we are at highs. If producers are looking to do something on the option side or the LRP side, feel free to get in touch with us because these are, some of these cattle still work, but do they work at $10 back? I don't know that we're setting $10 back, but the risk is there at these levels. So I think it's prudent to take a look at either some floors with put options, LRP, any of those products available to a producer.
All right, let's switch over to grains. Yesterday, the progress reports came out. Let's talk about corn first.
Yeah, so we could talk about the conditions. Conditions were up. I didn't put that chart in here. Conditions were quite a bit higher. Illinois led the way on that. 53% good to excellent versus 50%. Um, I don't know that the trade cares that much about the good to excellent ratings right now, but we're focusing, switching towards harvest. And last week we had 9% harvested, 5-year average 13%, currently 15%. People that I'm talking to are making really good progress. Dry crops come out fast, and that's what we're seeing right now. Yields continue to be all over the board. One customer I deal with in that triangle, that South Dakota, North Dakota, Minnesota border, he reported 68 bushel corn on a farm. His neighbor had 2 miles away at 220. So continually, I think the market's struggling to get a grasp of where this actual yield is going to shake out this year.
How did soybeans do?
Yeah, so moving ahead to soybeans, we had current average 12% last week at 5-year at 11. We're making some progress. It looks like this week will be the week to get going, probably the weekend into next week now with the rain. It'd be nice to get some more bean yields from people. If they have them, feel free to shoot them into the Comstock report. It seems as if most bean are less than APH, but better than expected as a blanket statement so far.
So, overall, are these numbers? I mean, we've talked a lot about these numbers and what people were expecting and what people were hoping. Are people now happy? Not so happy? I know that we did get some reports in and some people were not happy at all, but I feel like more people have come in with better results than what they thought.
Yeah, I would say as a blanket statement, some of those really dry pockets are yielding quite a bit better than what they were anticipating. Now, having said that, continuing to get a lot of phone calls with people that think they're going to be right at their APH or, their crop insurance levels on the corn side of things. Beans, I don't know that we got a solid enough test out there in the northern part of the corn belt to get an established trend. I guess we'll see as that shakes forward in the next week.
All right, let's finish wrapping this up with the stock reports and kind of what numbers we saw coming out.
Yeah, so here, just threw up a quick chart here. Corn stocks, soybean, wheat stocks. Not a lot to take home. We don't need to dissect each number. The USDA has a tendency, if they're going to make an adjustment on 2022's crop, uh, either yield or acres, it could show up here. Trade expecting about 7 million less on corn, or excuse me, 7 million less on beans, and about 11 million less on corn. I think that's everybody's fear working into this week. We're seeing kind of stagnant markets on the corn side of the world. Beans have had a pretty decent range here today, all the way down from 1289 up to 1307. So pretty good trading range on the beans. I think once we get this report behind us, hoping that we don't stop with the government shutdown to get that that October report, we're going to start put this to bed at least, and put that worry away for the traders that, hey, they really come out and adjust the stocks significantly higher or lower, but the bias probably is not for lower.
All right, that'll do it for this episode. Thanks so much.
Thank you.
For premium content, you can head over to the Comstock Report. Don't forget, hit that subscribe button.